YieldMax ETFs have been providing some insane yields with sky-high weekly and monthly income payouts, which may have you thinking, is this too good to be true? Well, in this video, we're going to dive into some of the best YieldMax ETFs on the market today and break down what each one's about to help you decide which one may or may not fit your investing strategy. So let's get right to it. If you're not familiar with YieldMax ETFs, they aim to provide high monthly income by using synthetic covered call option strategies, which for YieldMax funds, they're used to replicate the benefits of a traditional covered call without needing to own the shares. These types of derivatives are used to mimic the performance of the underlying asset without actually owning it. And the premiums collected from these options are those nice chunks of income that's paid out to investors. The YieldMax ETFs provide some really nice double-digit yields, which can be delivered monthly or weekly depending on the fund. This can be a huge plus for those income investors or those that are looking to supplement other income sources or investments. But it's important to highlight that these ETFs aren't for everyone. They're not going to be ideal for investors that are looking for long-term capital growth, and this is because of the call option strategy and synthetic nature of their exposure. Their upside potential is going to be capped. Now be aware that when the funds pay out these distributions or dividends, the NAV or price of the fund will decrease by that distribution amount. Since the income is so high on these type of funds, they can suffer from NAV erosion. Also, these funds can be volatile since that high income that they offer is based on their levels of volatility. Now that you have a better idea of what these YieldMax funds are about, let's get into the ETFs. First up, we have PLTY, the YieldMax PLTR Option Income Strategy ETF. PLTY aims to generate monthly income by selling call options on Palantir, and its strategy seeks to generate strong yields and exposure to Palantir's price movements with capped potential gains. So if Palantir continues to grow over time, you can reap the benefits through possible share price gains and that income as well. But unlike the capped upside, you're vulnerable to all the downside risk of Palantir. If you don't already know, Palantir is a company that builds digital infrastructure for data-driven operations and decision-making for defense organizations, government agencies, and other companies. This includes developing software platforms that can integrate data from a variety of sources and provide recommendations and predictions that are driven by AI. Now, Palantir has had some explosive momentum over the past year with its strong returns and growth, along with the surge of demand from investors. And the fact that it's rooted in AI makes it a volatile stock. So this is going to be a fund that's geared towards someone that's more bullish on Palantir and is looking for the opportunity for some high monthly cash flow. When it comes to the income, PLTY currently has a distribution rate of 68%, which it pays out monthly. And if you take a look at the monthly income that PLTY has provided since it's been around, it's gone up from the start, but you can see it's had quite a wide range in its distributions, with more recently $4.66 in April, $7.04 in May, and $3.26 in June. So definitely some big fluctuations there, and also keep in mind that there's no way to know what the future distribution levels will be. As for the cost, PLTY has an expense ratio of 0.99%, costing you $99 for every $10,000 invested. And this higher amount is expected with these types of actively managed funds. Getting into the returns for PLTY, since it was created in October 2024, it's had total returns including the distributions of over 100%, which can be linked to the crazy performance and volatility that Palantir has been experiencing. Now, this fund and the other funds are not about maximizing the total returns within your portfolio since the upside is capped. They're income-focused funds. But I'm showing you the total returns just to show you the impact of the income they've provided and the time that they've been around. This fund can offer you some nice potential for income, but just be aware if Palantir declines in value, so will the fund's price. And it could be a bit more difficult for PLTY to keep up those higher distribution amounts if the option market doesn't hold the current premiums. Next up is ULTY, the YieldMax Ultra Option Income Strategy ETF. ULTY aims to generate weekly income by using a portfolio of covered call strategies on select US stocks. It also gives exposure to the price movements of these stocks with a limit on potential gains. ULTY's investment sub-advisor would typically select between 15 and 30 underlying securities, mostly on the basis of the implied volatility levels of the stocks. and will regularly review ULTY's portfolio to determine whether one or more of its cover call strategies should be increased, decreased, or eliminated, and if any strategy should be implemented on any new holdings. More volatility is going to be more income. ULTY, as I mentioned, will have between 15 and 30 holdings, and currently its top holdings include companies like Robinhood, Tesla, Palantir, Coinbase, and leverage holdings like ProShares QQQ. These more volatile holdings are expected since the strategy relies on higher levels of implied volatility so that the premiums can support that high income. The top sectors that make up ULTY are technology, financials, consumer discretionary, and communication. ULTY currently has a distribution rate of 77%, so pretty solid here. When it comes to its payments, which as of March are paid weekly to investors, they have managed to be pretty stable. As before, you can see that its distributions were monthly and had been trending lower over time. For the cost, ULTY has an expense ratio of 1.3%, so definitely a bit on the high side there. For the returns for ULTY, I'm only going to go as far back as April, since around mid-March, payments were changed to weekly and the fund strategy had changed to incorporate using a variety of option strategies. For the returns for ULTY, I'm only going as far back as April, since around mid-March, payments were changed to weekly, and the fund strategy had changed to incorporate using a variety of option strategies. So over the past 3 months or so now, ULTY has had total returns, including distributions, of 24%. It's pretty hard to complain about that. Since these changes are pretty new, I'm interested to see how ULTY performs with some more time, and how long it may hold its consistency with a slight upward trend and that nearly $1 distribution, which isn't bad at all. It's important to remember that while ULTY holds a lot of tech holdings, don't have expectations for capital appreciation. Due to the options, the upside potential is capped and you're exposed to all the downside risk. And while this fund does offer the opportunity for some pretty high income potential, it won't be on the same level as those individual stock funds like PLTY, MSTY, and others. With that being said, I believe while it's still risky, it manages to be less risky than those type of funds due to having a variety of holdings. This next one is MSTY, the YieldMax MSTR Option Income Strategy ETF. MSTY's goal is to provide monthly income by selling call options on MSTR and targeting strong yields while maintaining limited exposure to MSTR's potential price appreciation. And MSTR used to be known as MicroStrategy, but now it's called Strategy. Now MSTY doesn't own Strategy shares directly. Instead, it uses a synthetic cover call strategy blending US Treasury bills, cash, and short-term call options on MSTR to generate income from the stock's volatility. What's unique about MSTR or strategy is that it functions less as a tech company and more so as a Bitcoin proxy, with its strategy of utilizing equity, convertible debt, and cheap fixed income securities to fund Bitcoin. With nearly 600,000 Bitcoin, Strategy is the largest corporate holder of Bitcoin and is heavily impacted by the price movements of Bitcoin. Because of Strategy's leveraged Bitcoin holdings that are mostly funded by debt, it makes it highly volatile. This brings me back to MSTY, that this higher volatility in MSTR equals higher option premiums, which plays into MSTY's distribution yields. Currently, MSTY has a distribution yield of around 88%, which has come down some from previously blowing well over 100%. Taking a look at the distributions over the year, you can see how it's fluctuated, going down and up and down again. Which you have to keep in mind that this income stems from the level of volatility that MSTR is experiencing, which currently now is low. Lower volatility is going to result in lower distributions and vice versa. For the cost, MSTY has an expense ratio of 0.99%, no surprise here, and the same as we saw with PLTY. Getting into the total returns including dividends, in the past year, MSTY's returns were over 100%, which is pretty crazy to think as it has provided some serious income. There's a reason why MSTY has been so popular, and that's because it's been an income powerhouse for many investors. And while it can serve well with the right strategy and portfolio, it does come with some risks to be aware of. One of the biggest being that a Bitcoin bear market could really take a hit on MSTR's price and volatility, having a huge impact on MSTY's premiums and distribution rate. If you believe in the future growth potential and heightened volatility of not only Bitcoin, but MSTR, and you understand the volatility that comes with it and how it can offer you some serious yields, then MSTY could be one for you to look into. Next up, we have Ymax, the YieldMax Universe Fund of Option Income ETFs. So this fund is quite different from the others on this list, as Ymax is a fund of funds, so instead of being invested in an individual company like you find with MSTY and PLTY and others, Ymax holds a variety of different ETFs. And Ymax aims to generate weekly income and give you exposure to a basket of YieldMax ETFs with capped upside potential. Now, Ymax itself doesn't use an option strategy, as the underlying YieldMax ETFs that it holds uses synthetic call option strategies. So the top holdings that make up Ymax, as you can see, are a mix of different YieldMax funds, which some you may know already like MSTY or MVYD or others, and the fund's portfolio would generally be equally weighted in each of the underlying YieldMax ETFs. Also, the fund's portfolio is rebalanced monthly and adjusted to include eligible new YieldMax ETFs. Moving on to the distributions, from this chart, you can see that previously Ymax had provided income monthly until around September of last year. And if we zoom in on the more recent weekly distributions, you can see it fluctuates quite a bit, which is to be expected with the volatility of the holdings in Ymax. Getting to the cost, Ymax has an expense ratio of 1.28%, which is a high fee, but it's the combination of the management fees and the fees of its holdings, so no surprise here. For the total returns, including distributions, Ymax has had total returns of around 24% since it had changed to weekly payouts roughly 10 months ago. A nice benefit to Ymax is that it offers you some diversification compared to those higher risk, single stock focused funds, while also giving exposure to a bundle of ultra strategies aimed at giving you maximized yields. But like with any of these funds, it's important to be aware that high income is volatile, and all the funds that are within Ymax are volatile in themselves, so Ymax cannot be more consistent and stable than the combination of the holdings that make it up. But if you want to learn about some other high income ETFs that are a little bit less risky, then take a look at this video here, or if you want to see what the two new ETFs are that could outperform JEPQ, then take a look at this video here. And if you made it this far, thank you so much for watching. Don't forget to like and subscribe for more content, and I'll be seeing you on the next one.